Cool. Let's get started. Today we're going to do a breakdown of Moonwell, our main earning protocol in Nook. So just a bit of context before we jump in. We do this every time, but key part is why we're here. We're here because normal people, including myself, have been left out of the $100 billion plus crypto lending market. Why does that matter? Why does it matter that we're left out? Basically, it's a big earning opportunity. So the current lending market is $40 billion in total value being lent out, 83 million existing customers across the world and growing in APYs of 30%. That's huge compared to if you look at Bank of America, 0.05% or 0.5%, Robinhood, 4%. This could be huge. How does this all work? Great breakdown here from University of Oregon Blockchain Club. Shout out. Main kind of thing to understand here is that it's all based on supply and demand. So on the right, you are supplying, you are the lender. On the left, you are the borrower. So all that is brought together by a DeFi lending platform like Moonwell, in which you deposit fiat currency and the borrower is able to receive that fiat currency and use it how they will. Pay for a car loan, pay for taxes, and use their underlying asset like Bitcoin without having to sell any of their Bitcoin. So that is used as collateral. If something were to go wrong and they were to not pay back that loan, then the protocol keeps their Bitcoin and therefore you keep your money. The borrower cannot run off with your money if everything's collateralized. It's all built in through Moon. It's impossible for someone to just run away with the money. So that's what makes DeFi different than traditional lending, right? People go missing all the time and they take out a loan without any collateral, leaving the banks on the hook to pay you back. That doesn't happen here. Let's jump ahead to security, how it's generally safe, and just kind of go through the three main breakdowns. Collateralization of assets, like we talked about, people can't just run with your funds. Loans are collateralized. Second part is third-party ratings, right? We don't grade our own homework. We tell you it's safe. We also bring in third parties like Exponential Phi and Vaults, FYI, to show you that they're safe. They look at other pools and different pieces. Third is ownership of funds. You still own your wallet. You own the account. We do not store your money on your behalf. You still store it on the blockchain. You own your funds. You can take them off platform, convert them back into USD, cash, whatever you want. So let's look at the results. From 2024, we saw some huge results in terms of APY from Moonwell. This is the core USDC market, which means this is people lending USDC on a protocol called Base. If you don't know what USDC or Base is, that's okay, but these are the core APYs. And if you look at the average, it's pretty strong, 9.34% APY over 2024. Again, really beats a standard bank saving rate, really beats a lot of things in the market. Let's jump into the data itself. So screenshot here of DeFi Llama. I'll just kind of give an overview and then we can go into the details. But DeFi Llama provides a breakdown of lending protocols, ways to earn yield, a few key things to look at here. Let's not jump into the chart, but let's look at the rate. The rate is now lower. So on average, the past 30-day rate has been 5.37%. Current rate's 5.5. Now remember, it's subject to change based on supply and demand of what we looked at. So it could be 5.5 today, 5 tomorrow, 6 the next. But just look at the average and look at the average in terms of the pink lines. So right now it's down over the past few weeks, sure, but it's been insanely high above 20 and sometimes even 30% in the past. So if you ride that up and down throughout the year or over the years, there's a lot of return over time. Now let's look at two other things, right? Risk and supply. Risk, a breakdown across the pool design, the assets, the protocol, the chain, all good or best ratings, which is great to see. All green here, no major flags. The second part is the supply APY, the base and the reward. When we say base here, that really is the core asset that you're lending. So USDC, which is cash, and then the reward is the Moonwell token. So over time, it's been a pretty healthy mix of mostly base, but sometimes up to 50% reward. The reason you see a much higher rate than what you see in Bank of America or some other protocols even is it's a combination of the two, but both can be automatically redeemed and cashed out. If you want to take a closer look, you can totally do that. You can go to DeFiLlama.com, check out different pools, different protocols, but really just goes further into breaking down what's so great about this protocol. One thing I want to call out here that is important is liquidity. So liquidity is key in terms of making sure that your pool that you're investing in doesn't get into a liquidity event, which means there's too many people trying to get out of a pool and there's not enough dollars to go around. So it gives a little bottleneck, right? What we're seeing here is really strong liquidity numbers. When we see really strong, that means we rarely see below $10 million. Currently, the TVL, total volume, is locked in at 12.52. And we haven't seen it drop below 10 in a very long time, basically since its creation. So that high level of liquidity means it's not a new pool. It's been around for a while, been tested. It's a high liquidity pool from our regard, and that's why it gets a really strong rating. If we jump into the website just to look at Moonwell overall, you can see all of the markets, right? Not just the USDC pool that we just looked at here, but all the pools. This is where it gets a bit more complex, right? If you don't recognize some of these tokens, I definitely don't. Never heard of Lombard stake token, but you'll start to see what else is available. Definitely some higher rates, depending on what you're lending. USDS, right? Not to be confused with USDC. But you can see that Moonwell has brought a lot of different assets together and a lot of different lending types together. So definitely different types of risk and opportunities here, but with Nook, we're not really focusing on that. We're really just focusing on the core USDC market. What makes a protocol like this above and beyond the rest is documentation and the Gauntlet dashboard. The Gauntlet dashboard is a great way for a third party to evaluate the key issues and give you a good understanding of what's at risk when it comes to lending on a protocol like Moonwell. I won't go super deep into Gauntlet. I don't look at it on a regular basis, but the team at Nook does. But essentially, you know that there's not a lot of money at risk here. All the numbers here are in good standing and in good health, and you can always jump into this if you want to. But it's just another level of transparency around going to is actually just the team itself, right? So who is behind it? Who created Moonwell? You can always learn more about Moonwell because their docs, their writing is completely transparent. Luke Youngblood, you'll see him referred here several times as the founder of Moonwell. He's also a former colleague of mine at Coinbase, based in the United States. So nothing shady in terms of an offshore entity, but Moonwell is, backed by real people with a real team based mostly out of the United States. You can learn more about them in terms of why they started Moonwell, how they're making lending more simple, their kind of vision for the future across Base, Optimism, other chains. But it's really just a good resource for you to kind of jump in and learn more if you have any questions about Moonwell. Okay, so how do we tie this all together? To Nook, what's the point of these rates? The point of the rates is to really save money, right? And apply these to our idle cash. So jumping straight into the Nook app, this is my Nook app. This is on my phone, iOS device. You can see I have $24,000 invested in Nook. This is my personal money. This isn't like a demo. This is the real deal. Here I can see the past 365-day rate, which is 7.7%. So that's over the past 12 months. And the current rate is 4.7. So not super high, I'd say, but still, again, higher than Cash App, Robinhood. And when things do change in the market, like this will likely go higher like it did in the past and like we saw in prior videos. So keep an eye on that. I can already see how much I've earned, right? So $101 already just over the past few weeks. The draw button is always there. You could always press the draw and you could always get your money out. So if I wanted to withdraw the full $24,000, I could do that right now, or I could just get $5 out. What that does is converts that cash. So it takes it off of Moonwell, off of our current lending platform. And you can send it off via Coinbase. Super simple. All you have to do is log into Coinbase. Really quite easy. Coinbase has been great in terms of just ask for a little bit of information to log in. Confirm your passkey, no problemo. Once you've confirmed your passkey and you've verified, it knows to send it to your Coinbase account. You can cash out immediately. So boom, that money is headed off of Nook from your self-custody wallet into your Coinbase account. Your Coinbase account, you transfer it to Bank of America, Wells Fargo, keep it in your Coinbase account as cash, buy Bitcoin, do whatever you want, but it's just as good as cash now in your Coinbase account. Nook in less than 30 seconds. From there, you can always deposit more. So if you want to deposit $5, you can go back in there with Coinbase, do a bank or wire transfer. We're adding more options there. And you can always see your breakdown of your cash here. So the current APY, again, is 4.7%, 5.3% historical 30-day. And then over the past 365 days, it's been 7.7%. So remember that rate fluctuates over time. So this rate could shoot up to 5, 6, 7% tomorrow. It really all just depends on the market. It depends on what borrowers are borrowing. But I can always see how much I've earned in core rewards and then my extra rewards. The extra rewards is the rewards provided by the lending partner, which is Moonwell right now. I can always cash those out whenever I want, or I can let them grow. We're working on some new features, adding friends, auto savings, etc. And you can always go into the settings page to learn more, contact us, deposit USDC directly, etc. But it's pretty self-explanatory and easy to access. So check out the Nook app. Pretty bare bones right now. Would love your feedback. Still early days. If you're watching this, you're very early. Or maybe this is 3 years in the future and you've somehow gone back to look at the very early videos of this. And if that's the case, I appreciate it. So download the Nook app. Follow us. We're on X. We're on YouTube. Talk soon. Bye for now.